On. Hey guys, good evening to everyone. We're live in YouTube, TikTok, and Facebook as well. So I know I wasn't able to post a video today in YouTube as I normally post one video on a daily basis, but uh, there, I just wasn't. So I am trying to compensate also and make a live video where um just send me whatever questions that you guys have, and I'll try my best to answer whatever it is, so we could cover what's happening in the macroeconomy, Philippine stocks, or even cryptocurrencies. So I'll try my best to give you as much value as possible. I know I haven't done a lot of lives over the past few months, because I just, for those who don't know, I just had a newborn baby last June, and it's been very very to say the least, no, it's very challenging to have a baby. It's very very time consuming. So there, but it's a new season in my life, and I don't know, I think it's something that we all have to embrace as, I don't entrepreneurs, investors. There will be seasons in your life that you have to be ready and prepared for, and you also have to embrace it. That when you are in one season, that you know that you are in that season of your life, you will be very abundant, you will be very good, you will have the grace, you will have the skill, and you will have the time also for that season of your life. And when you enter in a new season also, the things that you were doing before, you may not be able to do it in as much capacity also, but it doesn't mean that it's wrong, and it doesn't mean that um it it's it's something that's not good, but it's a shift, eh. And I think as investors we must be cognizant also, and we must be um I don't know, we need to know how to identify what's happening also on how things are, because the more you get to know how things are, the more you also get to decide from a business and entrepreneurial point of view. So I'm gonna read some of your comments also. I'll try my best, and then if there are people that are asking for greetings, I'll try to do that also. Then I'll try to go back to some of the questions as well, or maybe I go through some of the questions, then we go through it one by one. So I'll try, since we're live in TikTok, LinkedIn, YouTube, and Facebook, I'll try to look at each of the platforms too. We have Isabel Lopez. Hello to you. AJ is asking about REITs. Bitswing. Hello, hello to you guys. Then just greeting some people here. Okay. There's one good question. A REIT versus Globe dividend. So, please do note this, that A REIT has retraced quite a bit in terms of where it was from its all-time high to where it is now. I just want to say this also. When you make comparisons also, it would be nice to also look at it from an apples to apples comparison, meaning you compare it also with other REITs that's out there. So what A REIT gives you is in terms of, it's not just one of the first REITs, but I believe there's a premium to something that's Ayala based, or Ayala launched. In terms of yield though, since other REITs like MREIT, RCR, even C-REIT also have retraced quite a bit, their dividend yields right now, I think are relatively higher in terms of, if you would purchase them right now at a point where comparing it to the drops that they've experienced over the past months, they would give you a higher dividend yield. For Globe also, somewhere around 2 3 right now. It's the most ideal, at least, was a couple of weeks back when it tried to retrace, at least go to the 2,100 mark. But uh, if your plan is to diversify between the two, and you want to have something that's, they're totally different businesses. One gives you a play towards technology and telecoms, broadband, and another gives you a play in office rental. So if you would want to split it, I don't think it's a wrong idea. But in terms of yield, I think they're almost the same right now. But comparing it to the other REITs that are out there, a REIT will give you a lesser yield. So I hope I answered that question. Then you have Aljon Francisco. Good evening to you. Um, Renz Alipio. Ok ba mag-invest sa ADA coin? I've posted a couple of links. No? You can check this out. There's a very, very interesting site. It's called Crypto Flash that report. They have good insights on Cardano. There's a lot of uh, not just news bits, but a lot of opinion pieces and a lot of strategy slash insights for different crypto projects and the current thing that's also happening right now in the entire crypto space. So you could check that out from that perspective. But I think what's interesting about Cardano during this entire time is they've been continually building, and what's nice also right now is that they're not as noisy and quiet during the bear market means that they're building, and lesser issues it would be relatively good as compared to other chains that we've seen that have been dubbed also as eat killers, that basically they're the ones that have dropped very very big. Luna was something that was heralded as a as an eat killer. Their smart contract blockchain plus their algorithmic stable coins, but right now it's nowhere to be found. Solana also got pretty much hit by FTX. Everything that's connected to Sam Bankman-Fried has been pretty much not doing so well, and one of the issues of Solana was its outages. So I think what's interesting about Cardano is they have been building slowly but steadily, and all of the criticism about them over the past years was that they have been very very slow in terms of building. So if you, I'll differentiate between Ethereum and Cardano. Ethereum, they try to build as much dApps in it as possible. Versus Cardano, they took a very academic approach, which a lot of people didn't like it because it was a bit slow. But for them, it's working because they're not having um, the number of errors I think that's happening in other chains as well. So it's a slow and steady approach. So I think one this will hit people who are more who are willing to wait, who are willing to also see it develop and unfold. I think there's a lot of things in their pipeline from stable coins to side chains as well. So uh, it's also a proof of stake coin that I think if you're looking at what's left in terms of the top 10 in terms of market cap that are smart contract blockchains, you have Ethereum, then you have the BNB chain, then you have ADA that's pretty much in the mix. Then the rest are Bitcoin and stable coins. Then you have I think Doge, which is also part of the top, which is also part of the top 10. But other than that, those are the three right now that are vying in terms of market cap. And what's interesting right now also is when ADA hit somewhere around 3 last year, people were questioning that it might be too expensive at that current market cap. But right now, it's down almost 90 plus percent from its the highs of August September 2021. So all of the questions in terms of valuations or if it's actually cheap or expensive, right now you get to see ADA with more development from the past year to where it is right now, um, at a lesser price. So the tricky part about crypto also right now, in my opinion, is that it's since it's new, there's a lot of shady characters, and it's also a battle of trust. And I think what SBF did, Sam Backman-Fried did was he shattered a lot of people's trust. But please do remember this, that FTX, SBF, Alameda is not in the entire crypto space. For every bad player, there are people who are good, that are making it right, that are building technology to benefit people. So uh, it's sad to see things like that happen because it shatters the industry, especially if you believe in it so much. Please remember this. I've been in stocks for a longer time than I've been in crypto. And when I started hearing about crypto as a stock investor, I was also skeptical. But the fact that I'm in it, because it's so easy for me just to stay in stocks and just brush that aside because I'm comfortable in stocks. But the fact that I had the chance to be able to study and it made sense to me, it was something that I understood. and it's something that I was willing to deploy capital on. It's also something that's humbling in a way that when I first heard about it, I didn't listen to people, but it's never too late. And when I got to understand it, when I got to study it, it made all the sense to me. And as it made sense to me, I said to myself that I wanted to be part of this. I wanted to build, that I wanted to when please do remember this, when the dot com bubble happened, you had Amazon, you had Google pretty much on their very, very early phases at that time. I was still in high school. I was about to graduate high school to enter into college, and I didn't have a chance to take part in that because I was still young. I didn't even have money. I didn't have money to invest also for myself at that time. I was just relying on the allowances of my whatever my parents would give me. But it's almost the same way. At that time, most of those startup tech companies crashed, and a lot of them right now are nowhere to be found. And even the ones that were, for those who don't know this, if you're my age, I'm sure you know this, that late 90s, early 2000s, Yahoo was a much, much bigger company than Google. But look at what happened also. The Googles of the world, damn, and everyone was using Yahoo Messenger more than people chatting in Facebook, chatting in Viber, chatting in WhatsApp. Everyone was using Yahoo Messenger, and it was such a leap forward already from MIRC. Do you guys know what MIRC is? Comment below if you know what MIRC is. For those who don't know, that means you're too young to have understood it. But in my time, no, the leap from MIRC to Yahoo Messenger was already so interesting that even me and my high school classmates, we were chatting in school, but we would look forward in at night to be able to go on our dial-up modems to be able to chat via Yahoo Messenger because it was so interesting. That was how big Yahoo was. But lo and behold, right now, Yahoo is still there. They're still relevant, but they're nowhere near the size of what Google is or what Amazon is. And I think that's where the iteration is also of where blockchain is and cryptocurrency is also as a whole. This entire ecosystem is still very, very young, and there's a lot of shady characters. There's a lot of things that really won't do so well. There's a lot of regulations still that need to be in place. But as it matures, you will find the ones that are relatively stable. You will find the ones that will be. For those who have been following me for quite some time, I mentioned this also that after Yahoo Messenger, you had the Friendsters of this world, you had MySpace, and you had Multiply. Those were the first ones. But right now, all of them, they're zero. Why? Because everyone started using Facebook. What's interesting over the next 10 years or the next 15 years or the next 20 years, we don't know what will be Facebook. There could be something that's new that could probably replace whatever we have right now because it's early. Um, but it's okay. That's why, from an investment point of view, I really believe that it's so important to really, really know what you're getting into, that you understand it. Because if you don't understand it, in times where it's rocky, it's scary, it tests how much you know about it, it would be easy for you to get away. And even in crypto, I always say that there's over 19,000 projects. Last time I checked, there's over 21,000 projects already in crypto, and um, I, I I I haven't looked at a lot of them, but the ones that I've looked at and the ones that I know, I think I have full conviction towards them, and that's what I'm actually saying. It doesn't matter if it's Algorand or Near Protocol or XRP or Cardano or Polkadot or FTM or Ethereum or Bitcoin. It has to be something that you know very, very well. It has to be something that you have full conviction in, and it's very, very important also to be diversified. A lot of people don't want to be diversified, especially if there's one asset class that's doing very, very well. And if that asset class is doing very, very well, why would you want to put your money in other asset classes that are not performing? But it makes sense. It makes sense that while one industry or one sector is being pummeled, there might be other industry sectors or asset classes that are giving you stability. There might be other asset classes or sectors that are helping you also, that could give you a return. That's why I keep harping on dividends, because dividends may be boring, but even if it's boring, it's a cash flow that you receive from it that could somehow offset what's happening also in other markets or other assets that may not be producing. In the same way, I said this, that I had friends also that had a large amount of vacancies during the height of the lockdowns, and some of them also up until now they haven't really fully occupied all of their units, all of their apartments or their condos, not, or if they're renting it out, it's at a lower price compared to pre-pandemic levels. And what kept them afloat also was that they had other asset classes. So it's not just that conviction works, but conviction with proper portfolio management, allocation, and diversification, that works. But that's boring because everyone wants to go for the 10x, the 50x, the 100x. Everyone wants that, but it's the responsible things and the boring things in life that will allow you to create wealth that's sustainable, that will allow you also that even in times like this, because you're diversified and you know what you're getting into, you won't lose a night of sleep. You won't be scared because you know what you're getting into. So, anyways, that was a lot, very, very long explanation on that. Uh, you have Kent saying good evening. Debbie, hello to you. Um, this was a good question. Mm, Ali, it's so interesting that when the peso devalued, please do note that one of the reasons why also that the Philippine market is down, it's not just inflation also, but if you compare the peso versus the US dollar, from the lower 50s, we've hit the higher end, close to 60. And because of that also, and of course you have high inflation and you have interest rates going up, the stock market went down, and Ali went to 23, 24, and as of last Friday, it went 28, 29, closing near the 30 mark. What's interesting is this, it for stocks, and I think this is the main difference between stocks and crypto, is that for stocks there's a way for you to see there's a tangible business that's actually going on, versus crypto, you're either analyzing it from a commodity like Bitcoin, a store of value, or a piece of technology, a smart contract like Ethereum. But for stocks, you get to see it from a business perspective. And what will all differ between all of us is time frames. What do I mean? We all differ with time frames. Um, there will be people who will look at either Ali or Converge and look at it as, okay, the price is down, but my timeline is somewhat longer. That after all of this is said and done, Ali, which owns all of the malls, all of the commercial centers, office spaces, a lot of the master plan areas, will recover. And for some of them, they're willing to take the pain and build the base while it's lower. For some, they can't take that. What does that mean? You will buy based on not just the amount of conviction that you have, but also the timelines that you have set forth in terms of how they will actually recover. Case in point, if you also look at Jollibee, Jollibee at the height of the pandemic dropped to 90, 100 pesos. As of last week, it hit 230 to 240 plus also. Why? Because there's a tangible business behind it. And what's nice about businesses is that it's not just about the system, the product, the brand, but also you have entrepreneurs that are behind it. What am I saying here? Uh, Great entrepreneurs, great business people, when times are bad, they know how to pivot, they know how to shift, and they know how to make things better. Please do remember this, that when times are bad, that's when you find out who are the great entrepreneurs. That's where you find out who are the ones that are really, 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 really good. Because when times are good, everything goes up. Everyone earns money. The businesses get more sales, get more revenue. They keep on expanding. But the ones that know how to pivot, the ones that know how to shift, are the ones that will come out of every pandemic, every crisis, every recession better. So, what did Jollibee do? The Philippines was one of the hardest hit in terms of we were one of the longest ones to open the economy. So what did they do? They stopped the bleeding, closed some of the Jollibee stores, pivoted online, and sold online, made their online platform better. But not just that, I'm sure you all know this, especially for those that are based overseas. Europe, North America, they opened their economy earlier, faster. What does that mean? If you've been to those areas over the past maybe a year and a half, it's back to normal. No masks. People are living like COVID is over. What does that mean? A lot of them earlier already were eating out. And Jollibee saw that. That's why they opened more stores in North America. They opened more stores in Europe. And that's what I'm saying. Company, the difference between stocks and crypto is that companies that are good, run by great people, know how to pivot, know how to shift, know how to find opportunities in the midst of every crisis. And that's what I want to submit to all of you. That's how you look at it. Look at also the business, like for example, like the question of Steven Converge, that okay, are they still one of the reasons why when they went into IPO they needed money because they wanted to go beyond Luzon. They wanted to go in Visayas and Mindanao, and because it was also a lockdown, a lot of people needed broadband access, and not a lot of people have broadband yet. Everyone has a phone, everyone has set mobile data, but not everyone has broadband, which is more stable, which is faster. And because it's such a green market, Globe can earn a lot from broadband, PLDT can earn a lot from broadband, and Converge can also earn a lot from broadband. So one of the things that you look at is how are their sales still increasing? Is their revenue still increasing? Are they building more and more people actually subscribing also to them? Because ultimately that will be, in my opinion, one of the triggers. Because in some areas I think there will be competition between PLDT, between Converge and in Globe, but in some areas also they might be the only ones that are there. So I think that that's the merit in that. How big the broadband industry will be, and how big a role they will actually play in all of this. So there. Comment below if you're learning. We've been live for I think 22 minutes already. LinkedIn, YouTube, Facebook, and TikTok. Yeah, if you're learning, hit the like button, share, subscribe, whatever. But I really do hope that this is something that gives you value and helps you. This is an interesting question. How to be view? I'll just drink first. One of the reasons pala why I don't do a lot of live sessions is that it strains my voice. Unlike you do a YouTube video that's 10 minutes and then you're done already for the day. This one, I have to talk. I have to talk a lot. I have to talk a lot also. But it's fun. I haven't done this in a while, so it's still nice to get to do this also. But I'll just drink. Give me 10 seconds. But put in your questions down below. Like, share, subscribe. Anyways, I want to answer this. This is not investment related, no. But I want to say this. Uh, it's nice to admire people. It's nice to look up to people. It's nice to also uh, at least want to achieve or do certain things that other people are doing. But my suggestion is this: don't try to be that person. Just be yourself. We are in a world where everyone wants to be like the norm, or everyone wants to be where everyone is. But if you noticed it, the ones that have been truly successful are the ones that did the things that are different as compared to what the norm or the average person was actually doing. Look at what Elon Musk is doing. People are dissing him right now for buying Twitter for 44 billion US dollars, or 40 plus billion US dollars. Um, what's interesting about that is everyone sees it as he's looking at it from a social media perspective. He's looking at it from a news perspective. But if you look at what the tone of how it has been, he's gonna use Twitter, one of the largest global platforms, as a payment service, as a way for people to be able to do cross-border payments. And for those who don't know it already, Twitter is highly connected to the Lightning Network. It's highly connected to Bitcoin, which allows people to be able to send money, assets at lightning fast speeds on a weekend, on an evening, at zero cost. And I think that's something that's revolutionary. I think that's something that will disrupt a lot of things because you already have a highly recognizable brand with a lot of users backed by someone with a lot of money, which is try to do something that's different as compared to what the traditional system is. Please do note that this is something that people may seem say that sounds crazy, but that's what a lot of people said also with him when he did Tesla. Please do remember this, that before he became the richest man in the world, people were laughing at him. He was up against the not just the largest car companies in the world, the Toyotas, the Volkswagens, the Chevs, the Fords. It's not just against that. He was also going against the largest gas, oil, petroleum manufacturers in the world. But he pushed it. What I'm saying is this: um, be yourself. The world is already full of copycats, average people that we're always taught in school to conform, to do what we're told. Nothing wrong with doing what we're told, but we're always taught that you have to do it this way, that 5 plus 5 equals 10. But what's stopping you from making 2 plus 8 equals 10, or 7 plus 3 equals 10, or 3 plus 7 equals 10, or 4 plus 6 equals 10, or 6 plus 4 equals 10? You get the point. Going to 10, there's different paths to it. It's not just 5 plus 5. And we've been so ingrained that it has to be 5 plus 5 for you to get 10. But it can also be 10 plus 0. It can also be 1 plus 9 or 9 plus 1. That's why you just have to do you. That's why one of the people that I followed, and I think he's one of the biggest thought leaders also, after after Elon, before Elon Musk, was Steve Jobs. And he said something in a speech that resonated with me. He said that I don't have the exact words, and I don't want to research it anymore. But um, life is in essence, this encapsulates it, that life is short. Why waste it living someone else's life? Why waste it living someone else's dream? It doesn't matter if people would laugh at your dream, but as long as you own up to that dream, and as long as that dream is yours, and as long as you fight for that dream, and as long as every waking moment of your life you go towards that dream, you keep on fighting for that dream. Because guess what? The higher you go, there will be people who won't like what you're doing, but that's part of it. The more, if everyone agrees with you, please remember this: if everyone agrees with you, that means you really haven't achieved much. That means you really haven't gone far. The further you go, there will be more people that won't agree with you. The higher you go, the harder it will actually be. People actually think that if you go higher, it becomes easier. People actually think that if you go higher, you will just coast through it. But in reality, you just gain more skills. You just gain more experience. That what seemed to be something that was so hard before, it doesn't seem so hard anymore. Something that used to destroy you, crush you, or would have eliminated you before, it doesn't seem to be like that anymore. So don't stop. It doesn't get any easier, but it doesn't mean that you don't have to develop the skill, the stamina, the experience to get better. There. Uh How's Xiao? Hello to you. Let's see. Um I do stocks, I do crypto. Um I'm not really, I'm not a forex guy. But I'll be in a talk with XM. this Saturday. I think it will be in Diamond Hotel. It's I think the admission is free, and that comes with all of the things that you can get when you come into a hotel with the food and everything. But I'll be talking about stocks and crypto, but you'll have other people who are know more about forex that will be also part of it and will be sharing their knowledge as well. So my suggestion to people is also this, that there's a lot there. You could flip houses, you could go for repossessed properties, you could go for leverage and buy condos and have it rented out. There's commodity trading, there's binary trading, there's stock trading, there's stock investing. You could be a dividend investor, you could be a crypto staker, you could be a person who trades crypto using leverage and futures. You could be someone who just focuses on shorting. There's a lot. What I'm saying here is this: try everything. Then, what makes sense to you the most, what you like the most, what you understand the most, what doesn't seem to you as work, that's what you double down on. That's what you focus on. Because if you're watching this and then you already have a job, and then you try to enter something just because there's money, that's not something that's sustainable. Because, as what I said earlier, the further you go, things will get hard. Eh. And as things get harder, if your main motivation is just earning and it's just money, you're gonna stop it. So my suggestion is, if you're looking for another outlet or another asset class or another business, it has to be something you like. It has to be something that doesn't feel like a job to you. It has to be something that you enjoy. And when I started out, it was really stocks. Stocks really appealed to me the most. It doesn't mean that options trading or forex or looking for repossessed houses or buying buying condos that are still on pre-sale is bad. It's just that it's not just me. So there. Gerald Salakup, hello to you. Steven from Jeddah, hello. By the way, guys, comment what areas are you guys from? I'm just so curious. There's a question here about Solana. Um, what's interesting about Solana was that prior to the whole FTX debacle was that it was around 30 US dollars already, from an all-time high of around 250. So it was pretty much down, and the biggest issues that people had with it was that it was VC backed, meaning some of them were dumping their tokens. Second was its outages. Uh, what's interesting though is that this whole FTX dilemma. Please do remember that I don't have the full report with me, but they also had assets that were in FTX, and the funding also, or one of the biggest backers of Solana was Sam Bankman-Fried. And as what I've mentioned earlier, one of the biggest uh, one of the biggest issues, or at least one of the biggest things to realize in crypto, is that it's all about trust. That's why Bitcoin has been there, is here for over a decade, because um, there's no central institution that you need to trust. And that's why I think Bitcoin will be very, very relevant even in years to come. And that's why when things are crashing, Bitcoin crashes the least versus all of the other altcoins. You've seen some altcoins drop 99% with no sign of recovering. Bitcoin has crashed several times but has recovered because there's no central authority, there's no central institution. So the ones that have the ability to have staying power, if they have a company, an entity, a figure, a community, a foundation behind it, is the strength of that entity, community, foundation, central figure that's part of it. Let me give you an example. Um, Binance, BNB. If you look at BNB, I think its highest price was around 700. Uh, right now it's 270 to 80, some below the 300 level. Uh, what does that entail? If you compare it in terms of all-time high to where it is right now, um, Bitcoin and Ethereum has dropped more than BNB. And I was listening to a panel discussion of ZZ just a few minutes ago while driving going back here, and there was a question of, please remember this. One of the issues of FTX was user funds. They actually used it, and he put it into Alameda, and they have more issues right now that's coming out. But what I want to say is this: there was something that ZZ said that was very very interesting, and it removes doubts to people who are looking at either Binance or BNB. Number one, it's not just that they created a transparent way for people to look at all of their assets, but they made it super simple. Whatever users put into the platform, say 500,000 Bitcoin, it will always be 500,000 Bitcoin. They will never use other people's assets and loan it out or send it to other people. It will always be 1:1. And that creates a certain level of trust, and that creates a certain level of transparency. So I think above and beyond the issues that Solana had prior to all of this was because of what happened, it has somehow dampened trust towards Solana. And it's not just towards Solana, it's toward the entire cryptocurrency space. And what Sam Bankman Fried did was he dragged the entire cryptocurrency space, even if it's not Bitcoin that's scary, it's that there are people who have malintent that are trying to game the system. And please do remember, Bernie Madoff and other people have done that also in traditional finance. It's not a question of the asset class, it's a question of people who had bad intent. And please do remember this: Bernie Madoff did it into a traditional financial institution that has been there already for hundreds of years. If he did that for something that has been established, how much more for crypto that hasn't that's just been there for 12 years? And I want to say this, that Bitcoin isn't the entire cryptocurrency space, and the cryptocurrency space isn't Bitcoin. In the same way, FTX isn't Bitcoin, and Bitcoin isn't FTX. So there. Uh, this is an interesting question. So, good evening to those who are joining us. We've been live for about 40 minutes already. I hope that you guys are learning from all of this. Uh, Emily Akuin. Um, how is our economy in terms of the stock market, and what about the real estate asset? I wanna answer this in a couple of things. Number one, the economy and the stock market are not different things. The stock market is a leading indicator. The economy is a lagging indicator, meaning before things reflect on the economy, it happens first in the stock market. Let me give you an example. Uh, normally when I get invited to talks, I normally would give this as a very very interesting example to a lot of people. Number one, 2008 crisis. People always talk about that there was a global financial crisis in 2008. But if you noticed it from a stock market point of view, 2007, late 2007, early 2008, we've already seen the stock markets in the US or even in the Philippines uh, drop a lot. And when Lehman Brothers closed down, the large institution, it was already near the bottom of the stock market. And I like what Kevin O'Leary said. I just want to segue into this. One of the evidences that you know that uh, a bottom has been hit already for a particular crisis is that when there's a sacrifice, there's a company that will fold. There's that that will either go bankrupt or insolvent. In 2008 was Lehman Brothers and a couple of other companies. In 2022, actually thought it was already Terra Luna. But when Kevin O'Leary was speaking, he made that statement somewhere around June. Terra Luna already had crashed. And to think about it right now, what if it's FTX that has been the ultimate sacrifice already in this entire bear market slash recession? That because they folded up, please do remember this, that FTX is, they're the third largest in terms of spot trading in the whole world. Number one is Binance by a mile. But um, FTX is number three. They're large enough. The FTX US is something that's heavily regulated, but it also closed down. So what if it's them? What if it's the this is the last already, and then we see things start to go up? What I'm saying is this: before things happen in the economy, it's already priced in the stock market. One example is this: lockdowns of March 2020. That's something very very fresh to everyone. The Philippine Stock Exchange dropped to 4,000 plus intraday, went around 5,000. Uh, the US stock market also dropped over 50 plus percent. What am I saying? Um, GDP figures that we went into a recession came in 2 quarters later because definitions for a recession is, or a technical recession is that 2 quarters of declining GDP. Essentially, that's what it generally is. 2 quarters of declining GDP, and but the market dropped months before the entire narrative that a recession was already there. So what I'm saying is this: the economy and the stock market are not the same, but because the stock market is pretty much sentiment driven, because it's easy. I think the liquidity of the stock market could it could be its pro and could also be its con. Meaning it's pro because if you want to get out, you can get out anytime. But because you can get out anytime, also somehow it's easier for people to decide based on emotions. Somehow it's easier for people to decide based on when they're scared. They could easily dump and they could easily get out and then regret it also later on. So because it's pretty much emotion driven, when everything's scary, you will see people boom sell and it drops a lot. And for those who read my books, I would write it there that more sellers bring the prices down. And when people are scared, they sell. When a lot of people sell at the same time, prices go down a lot. And at times, it may be as sharper than how bad the economic situation really is. So there. Uh this is an interesting question from Unpredictable J. Sir Marvin, is play to earn too soon? So I'm sure you've all followed this, especially for those watching this from Southeast Asia. Play to earn was very, very big in the Philippines. We were at the epicenter of all of it. Axie Infinity was at the epicenter of all of it. Uh, the emphasis at that time, I think, was pretty much the earning part. People quit their jobs. People put money that they couldn't afford to lose to be able to be part of it. And because it's at its early stages, I think one of the things that was so interesting about it was that for it to have staying power, it must attract a large amount of people that really, really, really love to play it. Um, and I tried to play it. I did so for maybe a month, but after that, it wasn't something that I wanted to play anymore. Uh, it wasn't something that I enjoyed as compared to I only play one game. So I play StarCraft 2, and for those who are my age, you probably know what StarCraft 2 is. Um, I don't get paid to play StarCraft 2. If you look at it from a time perspective, it 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 consumes a lot of time if you play it, but I enjoy playing it. And I think that's what lacked in the first iterations of whatever games that also came out. Some games literally you just had to press and then just wait for it to simulate. But because people were in it for the earning component, to a lot of them it didn't matter if the game wasn't as good. But please remember that if the game isn't as good, maybe it might be attractive for a short period of time. But if it's not something that's enjoyable or stimulating to a broader market, then there would be a larger amount of people that will drop off. I do know right now that there are people still playing Axie, which um, has attracted a certain number of people that are there. But what will make games better, in my opinion, over the next few years is that it should be something that's enjoyable. It should be something that even if people don't earn from it, uh, they will still do it because they like the game, they love it. It's something that they enjoy. Now, that being said, I think that will be the premise of all other games that will come out. The fight now will be who will have the best, the coolest game that when people are playing, what makes NFTs in this space interesting is that people suddenly have the chance to own assets. They get to own something in game, and they get incentivized to be able to play. It may not be something that they can quit their job for, but it could be something that they can do on the side that they're also enjoying, but also they get a piece of maybe earning or an asset that could be attached to it. And since it's in the whole Web3 space, I played. Comment below if you know this game, Contra. Up, up, down, down, left, right, BA, BA, select, start. That was one of the games that I played. I think I was grade one at that time. It was family computer. But everything that I achieved in that game, or everything that I got from that game, I didn't have any ownership towards it. I couldn't even take it out. In the same way, also when you play an arcade game or you play uh, a lot of the other games that are available that are already online, in Web2 you don't own any of it. What gives gaming NFTs merit is that you suddenly now own a piece of the assets. And I think one of the things that will correct also over time was that the Axis, when they first came out, they were expensive. It cost people a lot of money to be able to form a team. I saw people spending about $2,000, $1,500 in the early stages, or even $1,000 to be able to build an Axie team. Uh, Now, if you look at the prices, they're nowhere near that. I think you will see something that's somehow also affordable, that a lot of people can either come in at a very, very low barrier, or it could be like other Web2 games that it's free. But if you want to enjoy other parts of it, then you start to have to pay. I think that will be the model moving forward. But if I'll make some predictions, at least in GameFi, it would be the games that will last are the ones that are really, really good, the ones that are really enjoyable to play, good and enjoyable not just to a niche number of people, but to a broad number of people, that collectively a lot of people believe that it's something that's enjoyable. Um, Low barrier to entry, that they don't need a large amount of money to enter. And maybe if you'll add a fourth element to it, it's not as complicated that you need to have a seed phrase, connect to MetaMask, and be able to send this either stablecoin or native token to this platform for you to be able to do it. I think who can make that um, process less complicated in a way that no more stay no not, not a lot of hoops to be able to play. I think those people will win. And if you follow how esports is or have been or is currently constructed, the ones that not just develop a large amount of following or large amount of people playing, but when you already have icons or superstars that play the game that people are willing to watch. I think that's what's gonna make it interesting because it develops a cult following, and that's when you see stadiums being filled out because people start watching and playing the game. So I think the ones that can pull it off over the long term are the ones that will win, are the ones that will do better, are the ones that will survive. That it's not just anymore click something and then you earn something. It will mainly be um, what game is enjoyable, what game is fun, what game is good, how large of a community enjoys it, can they custody certain assets that are in the game, what price can they get in it, and then put all of those things together, and it's super accessible to people. And I want to say this, maybe one more thing. We haven't really seen a lot of the traditional Web 2 games come into this space yet. Because when they do, with all of the expertise that they have, I think that's where competition will stiffen. Competition might be bad for the existing projects, but competition will be good for the consumer because it will push people, it will push those projects to step up their game or to become better. So there. Namamaos na ako. Maybe I'll just take a few more questions. That's why I haven't really done a lot of this lives kasi it really hurts my throat, no? So a few more questions and maybe we'll call it for the night. Sorry. Luella, thank you so much. Um, Boji, I think I answered this also. Uh, Troy Legacy. Maybe this one, maybe this might be this is something good to answer also. Uh, Please do remember this that we're still not fully out of the pandemic. Um, we still have logistical problems around the world. There's a lot of problems from an economic perspective happening in China and the US. And please do remember this: the US is the largest economy. They're suffering right now from one of the highest inflation rates that they've ever seen. If you look at China also, because of COVID, they have locked down massively, and them locking down massively. wi- This is one of the biggest differences in China. They're not scared to lock down an entire city, and when they've locked down entire cities, it has been um, bad to say the least for their economy, and they haven't really fully recovered from that. And then you have all of the defaults that have been happening also from people buying property. Please do notice that one of the differences in China is that people have been borrowing and then borrowing and borrowing to be able to buy property. And what makes that a bit interesting also is that they could buy property for low down. In the Philippines, that doesn't happen because you need to have a certain amount of equity attached to the property that you're buying for you to be able to get that condo, get that apartment, or get that house. And then the banks still have to scrutinize if you have the ability to be able to pay it. There, people were just taking loans left and right, and it's also crushing their financial system right now. And then you add all of that with inflation and then the US dollar. There's a lot of things that even if we don't go into the worst recession, it doesn't matter because a lot of the issues that have not been resolved or that were created because of COVID is what's uh, getting out. So please do remember this that one of the reasons why inflation is high was because the US and a lot of the other governments or central banks printed money. And especially for the US, they said that it was something that was transitory. It wasn't a big issue until it became a big issue, until it became one of the highest inflation rates that they've ever had in a very, very long time. Um, that hasn't been resolved yet. And what they're trying to do to be able to resolve it is quantitative tightening. Please do remember what propped up markets in 2020 was quantitative easing, massive printing, massive buyback of bonds. Fast forward to where we are right now, there's no massive buying of bonds. There's no printing of money, and that's why asset prices in stocks, in crypto, are down because there's no more free money running around. And the mandate of the Fed really is to lower inflation no matter if it causes the economy to experience some pain. And if you look at it also, where the pain is coming from, it's not there's some pain in the business cycles, but if you look at it also, it's mostly investors that are getting the blunt of all of this. It's assets that are being pummeled and are getting down. So instead of focusing about how big the recession will be, I keep telling people, um, instead of focusing on things that you can't control, focus on the things that you can control. I don't know how bad things will be, but I do know how I can save. I do know how I can allocate my assets. I do know how I can protect myself from downside. I do know what I can control, how much my money will last if things go bad. I do know how I can work harder to get extra pieces of cash flow. So please remember this, that recessions are cyclical. If a recession should happen, it's just part of the cycle. But what's more important during that cycle is that what you are doing in the midst of that recession, what you are doing in the midst of when everyone's scared. Because I've been consistent in saying this, that in the midst of every recession, in the midst of every crisis, in the midst of when everyone's scared, that's where a lot of opportunity is. That's where you get to find things that a lot of people don't want to buy. Or you get to find things that are expensive, that were expensive before, but are cheaper now. So if you missed out on opportunities when things were higher, when everyone was so excited, you could use opportunities like recessions in order for you to be able to build something, because it's a cycle. When I say it's a cycle, it's cyclical, meaning at its lowest point, there will come a point where it reverses. Meaning, it's not a question whether a recession will end. The question that's so important that needs to be talked about is what are you doing while there's a recession, while it hasn't ended yet, while a lot of things are relatively cheaper. I think those are the questions that are more important, because when everything is exciting again, when the cycle reverses once again, everything becomes more expensive, and the ones that built something at the time that there was a recession, that knew that it was just cyclical, are the ones that will reap the benefits of it. It happened in 1997 in the Philippines. It happened in 2008 in the global financial crisis. We saw a crash, a very, very fast crash in 2020, and it will happen again. And when it happens again, that won't be the last time. There will be more to come. So we have to realize that we shouldn't be scared of recessions, but we should learn how to prepare for it. We should learn how to manage it, and we should learn also not to rely on our emotions when things like that would happen. So there. We've been doing this for an hour. I hope you guys got a lot. Yeah, it's tiring also to do this no 1 hour straight. And it hurts my throat, and also that's why I haven't really done. I've been very selective in the talks that I've been taking, at least for the past 2 years, because I'm getting older. I'm turning 40 next year, so and of course I have a daughter, so I'm trying to spend a lot of time with her also. I'm trying to raise a daughter. I'm trying to build memories with it. I know in this channel we talk a lot about investing and money, but you have to realize that money isn't everything. There are a lot of things that are of more importance, and there are a lot of things that you don't know how long you live. Eh. So save, invest, but enjoy life and live it to the fullest because anin mo yung sobrang daming pera if you're not living for your potential, for your purpose, or even for the things that make you feel alive. I guess what having savings and what investments would do is that it gives you options. It gives you the flexibility. It gives you the ability also to be able to that the decisions that you'll make is not pretty much dictated by how expensive or how cheap it is. It becomes maybe dictated by other things that are of importance and of value to you. So there, thank you everyone. For those who don't know, I have a TikTok channel. I post some videos there. I also have YouTube and Facebook. If you're just checking me out for the first time, I've pretty much been a stock market investor for the past 15 years. Crypto for the past 4 years. I've written 5 books, and I've spoke to over more than 10 countries around the world about my passion to educate people about investing. And if you guys enjoyed this hour-long Q&A, thank you so much, guys. I hope this helps you trade well, trade strong, trade smart. See you all again soon. God bless you all.